Good day, everyone, and thank you so much for joining our GTR Asia event. My name is Oswald Kuyler, and I'm the Managing Director of the DSI at the International Chamber of Commerce. Before we start, I would like to give some context to the session that we have. There's been well-published incidents in fraud all over the place, and it has definitely highlighted the devastating impact that it has and some of the underlying challenges. There are so many pressures already on the financial industry and the customers and broader ecosystem, all the way from the actual trade finance gap on the left-hand side and all of these wonderful new innovative use cases that we know that we can enable if we could just get rid of paper. I feel really privileged to be joined today by two leaders in the industry and two fantastic organizations that are working within this space to try and see how can we actually help improve both the financial services industry and also the broader ecosystem. Swift through their standards and their connectivity, and also MonetaGo through a lot of the innovation and all of the new services that they are busy developing in this space. I think it's something that we can all agree that paper is not here to stay. And if you think a little bit about our transformation over the last few decades, we started off in offices with cabinets and we had physical inboxes, and we ultimately transitioned from those to computers within our offices. And sure, people were skeptical. They weren't too sure what happens if the power goes out or the computer is actually stolen. Will I lose all my data? And what does that mean? But we've gotten through that transition quite okay, and we've seen a lot of great productivity innovation from that. I think everyone generally would agree that in the next 20 years, we will most likely end up seeing the same thing happen in trade finance. We'll finally get rid of the paper, and through that process, help solve for some of these massive challenges around not just fraud, but all the other great use cases out there. So it's my absolute privilege to be joined by both Jesse and Louise, who personally I see as two leaders in this space, and I can't wait for you to hear from them. So let's get started. Louise, would you like to introduce yourself first before we go to Jesse?
Sure, thank you, Oswald. Hi everyone, my name is Louise Taylor-Digby. I'm responsible for trade strategy here at Swift. I've been at Swift for the last couple of years. I'm based down in Singapore, and prior to Swift, I spent 15 years in banking. Over to you, Jesse.
Thanks, Louise, and thanks, Oswald, and thanks to GTR for hosting this event. My name's Jesse Chenard. I'm the CEO and co-founder of a company called MonetaGo. We've been doing services in the software in the financial services space for the last 7 years now, really focusing on, as Oswald said, how do we digitize the financial services space? How do we digitize banking? Prior to MonetaGo, I've founded a number of tech companies over the last 15 years or so, several of them being disruptive in the space.
Thank you so much, Jesse. So let's start off. Louise, we're going to start with you. Can you give us a little bit of a sense of the impact that fraud has had on the trade finance industry over the last 12 months?
Sure, great question. Thank you, Oswald. And to Jesse's point, thank you, GTR, because this is a really important topic for the industry, not just for the banking industry, but also for businesses up and down the land. So you've all seen the headlines. You know, there's been several high-profile issues that have emerged in the trade finance space, many of which have led to significant losses and even retreats. We've seen banks and financiers retreat from certain parts of the sector. The media has duly reported on this, quite excessively in some instances. But I think what's really key is the real economy impacts of this. So I'm not here to give you some hierarchical review of all of the events of the last 18 months. I'd like to draw attention to the fact that this has a real economy impact. It distorts the real risks involved in trade financing. And the people who ultimately pay for that are the businesses, the SMEs, on the corner of your street, up and down the land. Those are the people who pay for these kinds of issues. The ICC data, the trade registry data, shows us that defaults in trade finance are actually incredibly low. Impairment was less than 0.3%, even during an unprecedented pandemic. So the impact of fraud is being played out in the press over the last 18 months. But I think what we need to be mindful of is that this does ultimately impair the flow of financing and the flow of capital to the people who need it most. We've seen regulators step up. We've seen the Monetary Authority of Singapore step up and call for an explicit move away from paper. In September, we've seen the FCA and the PRA come out with a Dear CEO letter to the bank chief executives. So I think we're going to see, as a consequence, more regulatory scrutiny. And unfortunately, the timing just couldn't be worse. We're in post-pandemic recovery. Businesses are still trying to recover from the demand and supply shocks that have hit them over the last 18 months as a consequence of the pandemic. Not only that, but they're dealing with geopolitical disruptions, supply chain disruptions. So the timing actually couldn't be worse for the industry to be wrestling with these kinds of fraud issues.
Thank you so much, Louise. Jesse, to bring you into the conversation, when you started MonetaGo many years ago, could you actually forecast or foresee some of these events? And was that a part of the motivation for you to actually start the company and get into the arena and trying to solve some of these challenges?
Yeah, thanks, Oswald. It's a good question. So when we started MonetaGo, really the sort of the thought process was that there was this fantastic technology out there. And this technology, as a technologist, we sort of look at things and go, oh, well, this is easily solved. And so our first pass at MonetaGo was actually looking at how you could use cryptos and make them sort of bring them into the light and sanitize them and use them as a novel way for currency conversions and money transfers. We quickly realized about 2 years into it that we were way, way, way ahead of the game on that. And I think as one of the banks in India said to me when we first started working with them, they said, well, if you think working with Western regulators and what have you is difficult, wait till you meet the Reserve Bank of India. So we did the classic startup pivot, and one of the interesting things for me is it's sort of been over the last several years blockchain, and that's kind of where we initially started. We're a blockchain company, and interestingly, that did open a lot of doors for us. That helped us in India with the Reserve Bank of India co-wrote a white paper around blockchain and how it could be used in the space. But what I quickly realized is that the financial services space, and especially the trade finance space, was ripe for disruption. I was walking into banks and asking them, okay, what is your back office process for managing these workflows? And they'd look at me and sort of say, Excel. There was not a lot of automation. I came from sort of the internet space before, where I'd created one of the first video ad serving technologies, and things were moving pretty fast on that side of things, especially on the consumer side with handhelds and 5G and sort of the proliferation of data services to the consumers. Well, we quickly realized that MonetaGo was that same transformation hadn't happened internally, especially in the financial services in the back office space. So we kind of took a step back from saying blockchain, and sort of saying, well, what are some of the real problems here? And I think you could sort of hit it at the top there is paper is really the enemy of what a lot of the things we're doing. So as we started to focus in on, okay, what are the real problems here? Obviously, digitizing trade from end to end is a noble goal and something that we'll ultimately get to. But we also realized that there was somewhat of a middle ground there. And as often happens with a startup, we sort of backed into this experience where we wound up operating one of the first fraud networks for 3 receivables financing exchanges in India called the TREDS exchanges. The problem that they had was they'd launched, and it was permissible for a financier for a supplier to take their invoice to multiple of these different exchanges. The problem is that they could then ultimately finance on each of these TREDS exchanges. What they quickly realized, the TREDS exchanges, was that this was a problem for them because they could be triple or double or triple finance. So we put together a simple network for them, sort of solved this one sort of problem that they were having. But then as the industry heard about what we were doing and the ability to securely communicate amongst competitors, if you will, whether an invoice or another asset had been financed against, we realized that this was not just an India-wide problem as the financiers approached us there, but also a much larger global problem. So no, we didn't really have the foresight to see that double financing and trade finance would be a problem early on. But again, as a company, we sort of have looked at this as what are the discrete areas where we can enable communication. Standardization is really a big thing. I've said this for a number of years. It's not the technology that's the hard part. It's coordinating the legal side of it, the regulatory side of it, coordinating the different partners or parties that have many moving parts on the back end, and change is always something that's very scary at banks. So making them comfortable that we're de-risking versus adding more risk to the pile by adding technology. That's sort of been our real challenge of late. But yeah, no, our biggest goal is really stepped away from pushing a technology on someone and really going, okay, what are the problems that exist today? What can we solve now? And then what are the sort of the future challenges that we can lay the groundwork for?
Yeah, and I must say, just on a side note, I really enjoy engaging your team and tapping in on them because they truly are experts in this field. And like you touched on, it's not actually technology or a blockchain conversation. It's actually practical. How can we define standards and actually help solve this at scale? So Louise, let's definitely pull you in. I think there won't be a lot of people that's watching GTR Asia who doesn't know what SWIFT is and the absolute strategic importance that you have, both as a standards authority, but also as connectivity between all of these banks. So you have a unique capability and you have a unique position. And so how is SWIFT using this to try and help solve some of the challenges here?
Thank you, Oswald. So as you touched upon, we drive interoperability between around 10,000 financial institutions and market infrastructures in over 200 countries. And we do that across payments, of course, securities, FX and trade. And in the trade space, we are, I think, well known for facilitating around $2.5 trillion of documentary trade, predominantly between the financial institution legs of that workflow. We do also have a corporate proposition in there as well, where corporates can standardize those applications and interactions with their multiple panel banks for the provision of doc trade facilities. But I think what's really interesting is via those 10,000 banks, we can also access over 4 billion end account relationships. So the reach and the scale that SWIFT has is quite significant. And I think, we've touched upon it a number of times in today's conversation already. Half the time, the technology is not the problem. It's pulling people together around a common way forward. And SWIFT already has that. It already has that wonderful community. From a strategy perspective, we made some announcements in the last year about our new strategy, and this brings us to MonetaGo. From a trade perspective, we are increasingly becoming agnostic to the financing. So whether it's doc trade, whether it's open accounts, we are becoming agnostic. We're also looking to collaborate across the ecosystem enabled by our investment in APIs. So SWIFT has an API platform. Last year, we facilitated around 2 billion API calls on that platform. And we're looking at lending the reach and scale that we're renowned for to the API space and to the trade space. We're also looking at how we can collaborate with trusted third parties like MonetaGo. We believe, as you touched upon earlier, also there are so many fabulous solutions out there, and we can actually bring a value proposition to the table to help them scale. And that value proposition is really threefold when it comes to APIs. I think people think about standardization as let's standardize the data. And certainly that's a space we've operated in financial services for quite some time. And that's very important. But our API value proposition also helps to standardize the identity and the security protocols that are often the source of friction and fragmentation when it comes to APIs. So that's exactly the role that we're playing here. Financial institutions will be able to access MonetaGo's services through their SWIFT environment, so they can rely upon a standardized API data specification, but they can also rely upon those identity and security protocols that they're familiar with, that are already embedded into their back offices. So we're very excited about the pilots that we'll be moving into with MonetaGo. Again, leveraging not only our role as an API platform, but our role as a standards authority. Strong identity protocol, strong trust, strong sense of accountability. I think it's also important to note that beyond the API platform, Swift does also have, a suite of value-added services in the FinCrime space. So we have a KYC registry, which, thousands of financial institutions and increasingly corporates are registering their data in there to mitigate the friction and duplication in KYC processes across the ecosystem. And we also have developed a suite of financial crime solutions in the name screening and the transaction screening space, as well as some data analytics. And not to mention ISO 20022. Clearly, with the industry shift towards ISO 20022, you're going to get richer, more granular data. And that is going to be instrumental in helping resolve fraud and other FinCrime issues in general. So we're very excited about the industry move to ISO 20022. It's really not just a back office thing. It's an opportunity to significantly address some of the biggest frictions and costs in the ecosystem. So a number of things going on there, Oz, from a strategy pivot towards partners and APIs, to our big ISO migration, and not to mention our existing suite of services with the industry KYC registry and some of the other FCC solutions in there.
Yeah, and I must say, Louise, quite a few people underestimate that value proposition, just the pure quantity of organizations that Swift's already connecting. The fact that we've been using APIs as a technological community for a very, very long time, and it's something that we're all accustomed to, it works. And I love Swift's pivot, and not so much a pivot, but entering in that space even more so today. And to your point, identity and security is key. Do I know who I'm dealing with, and is the actual interaction secure? So I'm actually quite excited. I really am. And then you have KYC and all the others. So Jesse, this is a question that I myself would probably have a few answers to, because I speak to Louise quite often about this, but I want to get your view on it. Why is your work with Swift, in your view, in your own words, such a game changer in this space?
Yeah, thanks. So I think I mentioned before, I've started a number of different companies in the technology space over the last 20 plus years. And all of the successful ones have wound up coming through great channel partners. So the notion that you can go to market and hit everyone simultaneously with a product that is so hot and in demand, it's a real scaling problem for starters. I mean, the infrastructure just from a sales and education side of things is daunting. And so we actually started our work with Swift back in India. Swift India is a slightly separate entity, and when they caught wind of what we were doing there, they thought this could be of service to our banks. And so that was our first real engagement there. We were like, oh, you want to resell our service? That's interesting. But then as we started to look at it and its effectiveness there, and working with the Swift team, especially around the standardization of our messages and making it an open public standard around ISO 20022 as well, we kind of realized that, wait a minute here, we're sort of looking a gift horse in the mouth. We've got an organization with a direct line into 11,000 plus banks, which are all our target customers, and they've got this fantastic new API capability where we can basically layer our API layer their API over ours, and get all the benefits that Louise described. We don't have to identify this person. We know that connection is secure, and it works both ways. When we go in and say, to the IT or the IS department of a bank and say, hey, we're MonetaGo, we want to provide a service, the microscopes come out and the magnifying glasses come out, and there's a lot of sort of checking. Where are you hosted? How is this hosted? And all that sort of stuff. Having gone through a very rigorous onboarding and due diligence process with Swift, where they have done a lot of that checking, where they have done sort of the KYC and the due diligence on MonetaGo itself. As we go in and start to talk to banks, they say, okay, well, where's the service coming from? We say, oh, it's coming through your regular Swift channel, the secure API that you're used to connecting to already, that you've already done a GPI migration to. And then there's a bit of a sigh of relief from the internal side of things. So it's twofold. Like I say, it's a fantastic channel. You've seen probably a lot of startups in the fintech space sort of going, Swift is the old news, it's the old guard. We can do what Swift does, no problem. But again, it goes back to what I said before, and Louise touched on as well. The technology is the easy part. Getting the banks, the risk management departments, the compliance departments within the banks, the regulators within the country, the central banks within the country who may have been burned by scandals in the past, whether it be in Singapore or Mexico or a number of, I mean, pretty much anywhere in the world you can describe this has been a problem. Getting them comfortable with what we're doing, what have you, is the real challenge. Again, the technology piece is easy. So working with an organization like SWIFT that has the ear of the regulators, that has comfort level with it, with everybody around the world, because let's face it, they are the underpinning of our global economy. If it wasn't for SWIFT, money wouldn't move. So we're kind of, skating on those same rails, or gliding on those same rails there, where we want to provide a service in the trade finance space, which needs to be trusted. It needs to be standardized. It needs to have the identities of all the players clearly visible to each other, or at least trusted by each other. And SWIFT provides all that. So, it's interesting to me that more fintechs, and hopefully now with, sort of the light on what SWIFT is doing, their approach on the API, that more fintechs will take advantage of this. But, it's like back in the day when Twitter or Facebook enabled logins from different sites using your Facebook or Twitter credentials. I see SWIFT as being a fantastic enabler to do just that. So when fintechs go and approach a bank and they say, okay, well, this is great, but how do we connect to your service? They don't have to go through this long due diligence process, which is quite costly for their IT and IS departments. They wind up spending quite a bit of time and money vetting these services, unless there's a lot of inertia. So I feel like it removes a lot of the friction. And not only, like I say, does it enable us to get access to a whole broad range of customers very quickly, but it removes all of those sort of friction pieces there. And it's time to market, professionalism, all these different things are what I would call the game changers of working with the organization.
Thanks. And I think one of the key things that I've seen in my role at the DSI is I've seen a lot of people kind of sit on the sideline and go, I'm going to wait, I'm not entirely sure, X, Y, Z, is it a blockchain enabled world? Do I need to wait for all these 25 things to happen? But I think, Jesse, when I look at especially the fraud use case, and if I look at, for example, the work that you guys are doing with SWIFT, my assumption is that if I'm a bank and I fundamentally want to ensure that I can try to start catching these fraud-related events, this is not something that I need to wait another 2-3 years. I don't need to wait for all of the countries on earth to adopt Melita to catch fraud.
Yeah.
Would it be fair to say that this is something, the more the banks actually collectively as a leadership team kind of stand up and say, let's do this, the more of these events we can actually catch?
Yeah, absolutely. And so it's interesting. In India, we started with, like I say, three TREDS exchanges, a single digit percentage of the market, maybe even less. We still have arrested about 0.5% of fraud attempts on their platform alone. So, and this is what I say to banks. A lot of banks say, well, that's great. Let's get everyone on board. We had an instance in a Latin American country where the two top financiers in the space said, you know what, there's 5 of us, but if the top 2 of us go on board right now, statistically, there's a very good chance that we will still arrest some amount of it. So you have to start somewhere. And yeah, if there's one participant on the platform, well, yeah, it's fairly useless. But as soon as you get the top 2 or 2 of the top 5 financiers in the space on the platform, or even again a subset of the market, like the lower end, the SME servicing area, the effectiveness starts to prove itself right away. And then obviously, as you get the ecosystem built out, and other things that you can do, as well as authentication around the invoice, not just identifying whether it's been financed, but checking shipping data, checking customs data, checking tax authority data, checking e-invoicing platform data, to sort of give more comfort level, reduce the risk around making a decision to finance that particular asset, invoice, bill of lading, what have you. It snowballs, it compounds on itself. So it's not an all or nothing proposition by any means.
And Louise, I want to ask you something before we go, because I want to really ask also Jesse about the work that they've done on Pebble. So this might be a weird question, Louise, but is it similar for you when you actually look at trade finance and you look at all these innovations? And for example, you've done the KYC register. Do you have the same experience where some people kind of sit on the sideline and go, I'm not too sure? And if you do, how do you motivate people to potentially move?
I mean, absolutely. I mean, look at our experiences on the payment side, right? If we move, an entire ecosystem to GPI, right? It does take an industry to come together to make a change, and you have to be the change, right? You can't sit and say, well, I'm just going to wait for everyone else to jump. And I think, with things like GPI, it was, again, we have significant reach. We're a relatively small firm, but we have reach into many different countries and lots of engagement with the community, and lots of commitment by some of those first parties who chose to go forward and bring the rest of the industry with them. So there's an opportunity right now for financial institutions to take leadership roles and to really lead the industry forward in solving for this. And, our first crack at this is not going to be perfect, to Jesse's point. Our first crack at this might be 2 banks, it might be 3 banks. But if that stops 1 or 2 or 3 frauds, then I think it's worth it. And then we can start to really build that industry momentum and that industry effect. I also think, the agility of APIs should help us out here as well, right? It's a very agile technology that we're deploying to enable this service. So yeah, we've got lots of experience in trying to get solutions to scale. Some experience is better than other, I think it's fair to say, Oz. But I think the value proposition here is clear, as we touched upon at the top. It's been evidenced, from a regulatory perspective, it's been evidenced by the events of the last 18 months. And I would really encourage people to be the change.
I absolutely love that. And I think one of the things at least from my experience, Louise, Swift is not necessarily the organization that, has to make an announcement every month on what it's doing and, building, hype and all of that. But I think my observation is just like, the work behind the scenes and just, even at the DSI, the help that you guys give is just like, I can't imagine us navigating this world without you. So thank you. Jesse, what's up with Pebble? Where does Pebble come in?
Well, yeah. So I think it goes back to what the sort of the topic of the whole conversation has been is reducing paper, right? So if you look at sort of why we have paper, why you have disparities, reconciliation issues between systems, it's a lack of standardization. So going all the way back to ISO 20022 and sort of the ability for machines to talk to each other and all speak a common language. That's kind of one of the things that I see around Pepple as being interesting. The other piece is that as you start to have standardization around these e-invoices and what have you, you have the ability to look up the validity of this data in a standardized format. So many countries, as you know, around the world have introduced e-invoicing platforms. India is moving from their GST sort of based invoice documentation system to an actual full e-invoicing system. Latin America has been quick to embrace it. One of the things that, again, we do as a check as a company is also our authentication side of things is when these services exist and they're digitally available via an API, we can not only tell you, has this invoice been financed, but do the invoice details match what's been registered with the procurement system or the central e-invoicing system. So we obviously from our side of things, we look at certain data elements within an invoice. So we don't need to necessarily, we can do transforms on anything and look for different pieces that we need to build our hashes or fingerprints. But from an industry side of things, it's very exciting to us because, our sort of holy grail is an end-to-end straight through process that is completely digital and has little human intervention, no Excel spreadsheets, nobody, looking at a second screen and typing in over here from over there and fat fingering something and making an error and causing all sorts of headaches. So the more that we can get data normalization, data standardization, and enable systems to talk directly to systems without a human intermediary or middleware in between, the better. So, I think it's a very exciting initiative, and it's been interesting to see it start to grow beyond Europe, because it's something that, even in the e-invoicing solutions that have come out in Latin America and a number of different developing nations, they're not standardized. So, you've, as you'd like to say, digital islands. And so you've got an invoicing platform in one country that doesn't talk to another one. And so to the extent that we can all get on the same page, and very mundane and what have you, the standards conversations people's eyes tend to gloss over, but it's fundamental. It's as fundamental as the technology piece. It's as fundamental as the legal sort of framework and stuff that needs to be in place for everyone to trust these systems. So we're excited about the uptake of it, and also we're participating in any way that we can to help shape it and make sure that it meets the industry needs.
Yeah, no, thank you for that. I always find it fascinating. If you want to see scale, most of the scale that we see today on platforms that use standardization. Yes, we want to see innovation, and MonetaGo innovates, right? There's some foundational standards required, and then innovation that ultimately comes on top of that. So this has been really fun. I really enjoyed it. I think let's kind of do the last two questions. Let's potentially start with Louise and then Jesse. So Louise, any final thoughts and anything you'd like to leave the audience with at the end of this session?
Sure, thank you, Oswald. So, as we touched upon earlier, standards need to become cool, right? I think that's really important. The amount of conversations we have in the industry about certain technologies, and then you sit someone down and say, oh, what do you think about UBL versus DCSA's EBL standard? And to Jesse's point, people are not in the detail as much on the standards as they are on some of the new and emerging technologies. So I think, standards need to be given some more airtime. And standardization for me is, as I said at the top of the call, it's not just about the data model. There is significant friction and fragmentation when we have multiple different identity and security protocols floating around that people still need to do their risk and control checks on, and they still need to spend money integrating, and that slows us all down. So we need to think about standardization as not just the data specification, but also identity and also security protocols. I think digitization is going to be a marathon. I think you'd agree with that. It's definitely not a sprint. And as you guys have said, it's for me, it's not about the technology. Go and talk to your government relations team, ask them what they're doing about pushing legislative reforms. Go and talk to some of your colleagues about standards and find out what standards work's going on in your organization. And as I said earlier, be the change. If everyone sits on the sideline, we're never going to solve this problem. And the first question you asked me was, what's been the impact of frauds in the last 18 months? I can imagine that a lot of people watching this have spent many, many days and weeks of their life in the last 18 months explaining trade finance structures to risk and control officers, or going back through KYC packs, or, reviewing credit limits. We have an opportunity to mitigate these risks, and it starts here and it starts now. And as I said, time spent digitizing trade really does serve a greater purpose. At the end of the day, this is about businesses getting access to financing and capital.
I love that. Jesse, final words for you today.
Yeah, no, I think Louise really hit the nail on the head with her last statement there. A lot of what we're doing, it sort of gets stuck in the, fraud risk management, and there's debate about how much of it occurs and this, that, and the other thing. And you can sort of have circular conversations around it. But at the end of the day, the goal isn't really to catch bad actors. The goal is really to eliminate the bad actors from the system, so that we can have a frictionless trade environment, so that the SMEs aren't getting usurious rates for an invoice simply because they don't have access to credit history or strong identity protocols and things like that. So, to me, a lot of what we're doing is interesting from a day-to-day. Okay, let's digitize trade. Let's make this more efficient. I'm a technologist by background, and so I'm always looking at inefficiencies and how can I make this better. But let's not lose sight of the goal here, that ultimately what we're hoping to do is to make it such that the small business that has zero sort of credit history, zero infrastructure in the country that they may be in, if they're a good actor, if they're above board, if they're engaging in commerce in a legal and forthright manner, they should have the same access to credit as anybody else, and it should be done in a way that it may not even be a local bank financing it. It may be something that's ultimately securitized, broken down, and you may have retail investors securely engaging in this, because the protocols and the framework, the legal framework and the standardization and the technical framework is all there, such that this just opens up vast swaths of opportunity for the financial institutions. So, I think the one thing is to not look at this as, oh God, this is another headache that, we have to solve. It's really an opportunity to not only make yourselves more relevant in a number of different areas, but to also grow your business. So I think that to me is the key piece that I look at, not just okay, I can solve some fraud problems here, but we can actually make the global financial system better, which to me is very exciting.
I absolutely love that. Thank you, Jesse. Thanks, Louise, for joining us. And I also want to thank all audience members for joining us. Thank you so much. We really appreciate it. And thank you to GTR for the invite. Thanks, everyone. Cheers.